Ladies and gentlemen, welcome to BSV TV. I'm your host Satoshi, and on this show we'll be defending the one and only, truly genuine Bitcoin. The Bitcoin that Satoshi Nakamoto designed in his white paper as a peer-to-peer electronic cash system for the world. Let's get the disclaimers out of the way. So all the statements that you hear on this show are opinion and must only ever be taken as opinion. They are never to be taken as any form of advice, family, financial, sexual or otherwise. And on that note, let's sit back, relax, have some fun and enjoy the show. Get paid for your content in Bitcoin and set your own fee on Streamanity.
Yeah, I'm not surprised. I wasn't asked why I'm convinced Craig is Satoshi. I posted on Reddit. He signed in my presence using the private key from block number one, the very first mined Bitcoin block. On a computer that I'm convinced had not been tampered with, on software I'm convinced that had not been tampered with, a message of my choosing.
At Enchain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte because it validates what we've already done independently. We've tested up to 380 gigabyte blocks. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts. Basically ones that can run operating systems. That's all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades. That means high frequency trading. It means everything that happens globally.
Is the market that effectively BSV is going for, is that global e-commerce, which is currently valued at $29 trillion?
No, that's too small.
Buy and sell Bitcoin instantly at bsvgravity.com. And you can now book and pay for your winter holiday at skibsv.com. Alrighty everybody, rock and roll. It looks like we are live. It is after 5. In fact, it's 7:45 UTC. Welcome to Satoshi TV, aka Bitcoin is VTV, aka It's Just Bitcoin. So strap in, get your popcorn ready, get comfortable, because we've got a lot to get through, because a lot is happening in the space right now. Check it out. So let's just jump straight into it. Oh my goodness me. Look at this. So we've had an article in ZDNet about the 2 gigabyte block. Tal's just boshed out another 2 gigabyte block. And look at this. Cryptofights is back up and running. Look at this. Look at this. Let's get back onto their Twitter profile. This looks awesome. Let's see what they've said here. Look at that, and we're back with a bang. Cryptofights just hit 1 million transactions since the game's relaunch yesterday. Check it out at trends.cash. Grab the new version now. Oh, this is exciting. This is massively exciting. Let's just, I saw I think it was BSV channel reported something. Let's have a quick look. They put something on Cryptofights. I'm going to have to get into this game because this looks awesome. Especially seeing the number of transactions that are now being produced. Come on, Bitcoin SV channel. I know I saw it. I know I saw it. Oh, it's right the way down there already. Must be tweets and replies, surely. Let's have a look. Let's have a look. Cryptofights. The announcements. I'm sure I saw something that looked pretty good. Of course, there's so much stuff being tweeted about already that it's been bogged down. Maybe it was that maybe that was the one I saw. Yeah, so that's what they just said. Cryptofights back with a bang. Oh, this looks great. So let's just see what's going on. So look, so currently registering 55 transactions per second. Just wait for this to reload, and then these transactions will start loading up again. Look, there is the 1.9 gigabyte block. Mined by Tal that boshed out 10 Bitcoin as a block reward. Absolutely fantastic. Yeah, whenever you want to start working again, this is Bitcoin blocks live. After all, the clue is in the name. Come on, come on. Let's have ya. Okay, do we have to refresh the page? Alright, looks like we're going to have it open specifically, but that's alright. Let's have a look. Come on, come on, come on. Oh, seriously? I have a gremlin in my desktop. Maybe we'll have to come back to that. Bitcoin Blocks Live has trouble dealing with the volume of transactions being generated by Cryptofights. Let's have a look at CoinDance. Look at this. Transactions gone up to 80%, and that's just from one application. One little application, Cryptofights, transactions 80%, block size 97.25, all being processed by just simply 0.3% of the hash rate. It's absolutely insane what we're witnessing. Absolutely crazy. Crazy. Come on, let's see this bad boy. Oh, those transactions were looking great. So it looks like CoinDance is reporting the price at 171. That's kind of shot up a little bit quick. Let's just check that out. You know, but that's not what I wanted. I wanted this one. Live Coin Watch. Let's see what's going on. Have we had a bit of number go up on the news? 168. Oh yeah. We have had a little so a little dump followed by a pump. Okay, that's fair enough. Still heading in the right direction. It's exciting stuff. All right, well let's get into some of these articles then. I want to read the ZDNet one, but I also want to read this one. The ZDNet literally just came out like 3 hours ago, but we'll get through this one first. So this was the news via Bitcoin Association. So Blockchain Policy Matters, US Congressman Bill Foster. So let's see what this is all about then. So Congressman Bill Foster in the U.S. representative for Illinois, 11th Congressional District, and the also co-chair of the U.S. Congressional Blockchain Caucus. He sat down with Bitcoin Association founding president Jimmy Nugent, excellent, to talk about his unusual path to public service and the progress the U.S. is making in regulated and legislating for blockchain technology. Congressman Bill Foster has had a long and storied career, which is about what you would expect from a congressman's sole blockchain programmer. Foster is one of the US lawmakers who is working hard to make sure that the country has its head around blockchain technology and the potential benefits it can bring for government. However, Foster's career began not in blockchain or even cryptography, but physics. For 25 years, I designed particle physics accelerators and particle detectors. So actually the last of the giant machines in the United States was one I invented and led the team that built it, Foster tells BA, that's Bitcoin Association. Along that career, I designed 10 integrated circuits. I'm probably the only member of Congress who has designed and built a 100 ampere superconductor power transmission line. Sounds very cool. A hyper-specific vocation, to be sure. So of all possible fields to break into, how did Foster end up in this one? Almost every physicist was the smartest kid in their class, and there's an almost universal experience among physicists where they realise they're the smartest kid in the class, and they wonder if they're the smartest person in the world, he explains. And then somewhere along your career, you go on, and then you look around the classroom, and you realise you're not in the top of the class, and maybe only in the middle. It hit that in Harvard grad school, where I saw these brilliant people destined to have great careers in theoretical physics, and I realised I'll be a pretty good experimental physicist. The miracle of public key cryptography. Foster had his head around cryptography long before the words Bitcoin and blockchain entered the mainstream. So by the time the Satoshi Nakamoto white paper was released, Foster was already speaking Satoshi Nakamoto's language. He says that public key cryptography is a miracle. Of course, cryptography will be a general concern for anyone in government. It's a key pillar of national security. Being able to make sure something is secure means understanding what might make it insecure, says Foster. It's become important because Congress is putting a lot of money into quantum computing, with one of the main justifications being that it has the potential to be the potential to be able to undo some of these one-way functions that are fundamental to cryptography. If that happens after a class of cryptography has been deployed, it's a huge national security threat, and so I spent a lot of time trying to understand what exactly it means to be quantum safe cryptographic technique, which is still unclear to me, but is very important. The problem is, it is an existential national security threat. If someone broke the cryptographic techniques that are currently in use, it would cause a lot of grief to everyone from Federal Reserve on down. A lot of things that people are assuming are private will not be. It's a high stakes game trying to understand if we can do this or not. I'm sure that it's true in the mirror image in other countries. One of the fundamental missions of the intelligence community is to avoid technological surprise, which you can't imagine a better example than our enemies discovering how to undo the cryptographic techniques we're using. So what are lawmakers interested in? As lawmakers set about trying to patch any gaps in existing rules which might miss a novel consideration raised by blockchain technology, they must determine exactly where their gaps are. Blockchain and digital assets often seem like radical departure from what the world is used to, but this might not call for so novel a legal solution as one might think. There's the complicated situation where someone steals your coins and then immediately they trickle onwards. There's a very evolved set of laws on this. If you rob a bank with cash and then you go and stop at McDonald's and buy a hamburger, the question is, can the cops recover that cash from McDonald's? It's my belief that McDonald's gets to keep that as long as they had the belief it was legitimate cash. If, on the other hand, they were fencing operations who launders money, then they cannot say, says Foster. Then they cannot, says Foster. And so it's a very evolved set of law, and I think we're going to need that in the crypto domain as well, because there are very analogous situations where someone drags you into an alley, puts a gun to your head and says to get out your cell phone and transfer all your crypto assets to my cell phone. Under what circumstances can you go to the police and consult the court system and say, I want my money back and my crypto assets back? It's something we're going to have to face. However, the differences are important, he says. The big difference you see in crypto assets, cash and fixed assets, is the difference in mobility. For example, I've never heard of ransomware. Your screen says all your files are locked up and I want you to transfer all your real estate holdings to me. That would not work because the real estate holdings are traceable and you can go back and you can go to a court and say, that I had to sign over my title to this, but in fact it was a fraudulent transaction. And so cash is an immediate state, but the preferred thing for things like ransomware are crypto assets simply because there is no control point. Even for cash, if you're going to smuggle cash across the border, there's a control point where you have to hide it in your luggage. This obviously doesn't exist for crypto assets. So you have to distinguish the utility of crypto assets having to do with convenience from ones having to do with anonymity. I'm a big fan of the convenience and efficiency aspect, not so much of the anonymity. What blockchains can do to identify is a particular difference that Foster thinks about a lot. From the perspective of lawmakers and regulators, the prospect of unidentifiable parties to a transaction can be quite alarming. Take the highly regulated stock market, for example. If a bid is placed on an asset in an exchange, the counterparties are totally blind to one another. But that's not to say the information isn't there and available to regulators. They have an interest in that information. If they are to enforce their rules effectively, rules like those against wash trading, the practice of establishing a fake price for a given asset by buying it back, and forth from yourself. If you're going to prevent things like wash trades, that regulator needs to have a tremendous amount of very sensitive information. It's got to be someone you trust to do that. I think that's really the advantage of the free democracies of the world as a place where this will be domiciled. If you end up getting in a fight with a regulator, I think most people would prefer that regulators be based in one of the free democracies of the world rather than, for example, China. Identity is everything. For Foster, the identity question is a key area of focus. He recently introduced the Improving Digital Identity Act, which, among other things, would establish a government task force responsible for developing secure methods of identity validation for both the public and private sectors. Foster says getting the identity question right is a necessary step in the digital asset journey towards mass mainstream use. So even regulators know it's coming. If you agree that ultimately you want these things to be legally traceable, then you say, okay, how do you authenticate yourself as a legal participant? And then you come around very quickly to the need for a trusted digital identity. Not only do you have to prevent that from being fraudulent, from someone being able to impersonate you, you also have to limit or prevent people from operating multiple identities, he explains. For example, in the United States, the way most identity fraud takes place is that someone gets a driver's license in 4 different states under 4 different names and proceeds to establish a credit history and onwards. To prevent that, there is not really an alternative to have once in your life. Someone presents themselves a trusted authority, a government, authenticate themselves as a citizen, the way you do your real ID compliant driver's license. Foster is quick to point out that even these considerations are peppered with tough choices which need to be made. What do you do about undocumented people? What do you do with something like the US Witness Protection Program, which is essentially government-sponsored identity fraud, he said. That's one of the downsides of using the blockchain as a trusted source of digital identity, because maybe we'll want to make it somewhat less trustworthy under some national security situations. It's just one of the very complicated details that you get into when you try to design a real system. Well, again, that's kind of solved with Bitcoin really because of its privacy, you know. Interoperability is something that Foster sees as key consideration that must be taken into account as nations design their digital identity systems. It is inevitable that citizen identification is going to be increasingly taken online in the coming years. The EU has already expressed their vision for a digital identity for all EU citizens in the decade ahead, and Foster hopes the US will follow suit. Should this happen, it won't be enough that these systems work within their own borders. We're going to somehow have a way that we will get other trusted countries to let them know. It looks like that's a fraudulent identity as part of our witness protection program. Sharing your list of people in the witness protection programs with some countries might be easier than other countries. And so, you know, there's a bunch of very fraught international negotiations that have to do simply with establishing a way to authenticate yourself as a single legal traceable person. Foster and central bank digital currencies, together with the Digital Citizen Initiative, central bank digital currencies are another hot topic in the world of lawmakers trying to determine how to approach blockchain. Private sector companies are competing with national governments, who are competing with one another because of the prospect of a stable currency used to be the strict domain of governments. Thanks to blockchain, this might not be the case any longer. There's a long-term threat to the primacy of the dollar, both in and use in transactions internationally, but also in a reverse, ultimately as a reserve currency. Foster isn't ignorant that the appeal of digital assets for many is increased privacy, if not anonymity. So the idea of a government overseeing a digital currency is bound to turn some people off. But Foster is optimistic that it's possible to strike a balance between the need for government to have fiscal control and the obvious benefits offered by digital assets. If you design a central bank digital currency correctly, you can set it up so that you know, for example, if the Federal Reserve clears all payments, or at least people have the option of just saying, I want to pay you $10. I send a message. I authenticate myself to the Federal Reserve and authenticate a transfer from my account to your account of $10. Then it's possible that the Federal Reserve only knows that at this point in time, this account transferred that account, and they don't know that I just bought underarm deodorant or whatever it was, he says. I think that most people will end up being more comfortable with a transparent, legally based government identity like a Federal Reserve as being the single identity that actually has access to information. No way. You've got to be kidding me. You want to give your information to the Federal Reserve? They're a bunch of criminals. No way. No way. Again, another deluded congressman who trusts too much in his own government. Oh dear, oh dear. He has no idea. He has no idea what's going on around the world. Another one that needs to wake up. My goodness me. Anyway, that was an interesting article. Let's get into this one of ZDNet. Check it out. By Eileen Brown of Social Business. Check this out. So, she just sent me this. Here we go. Check it out. Seriously. Got it. This was her profile. Info. Yeah. Here we go. Check it out. This is so look at this ZDNet. Can you see that? 461,000 followers. That's huge. So chances are this article is going to get a huge amount of exposure. So let's see what this says then. All right. So Bitcoin miners earn over 50% total revenue mining 2 gigabyte blocks on the blockchain. The Bitcoin mining, as Bitcoin mining slowly transitions towards transaction processing, miners have the opportunity to earn substantially more than the current fixed block subsidy on offer. Beautiful, beautiful. Great picture as well. Loving that. See, look, we've got the B in the right place. It's straight, not crooked. So, Bitcoin, SV, BSV, and the Bitcoin Association confirmed this week that a 2 gigabyte block was mined on the BSV blockchain public network. This is the largest block to date to be mined on a public blockchain, according to Switzerland-based digital currency organisation. The block 700606 was recorded on August 16, 2021 at 20 past 3 UTC and contains 1.9999 gigabytes of data. This block earned the winning miner more in transaction fees than was earned from the current 6.25 coin Bitcoin block reward. Miners compete to mine a block and, if successful, receive a fixed subsidy, 6.25 coins, in addition to the transaction fees for the mined block. Larger blocks can contain more transactions. This particular block contained 5,869 separate transactions, with each network transaction paying a small fee to have the block mined. The larger the block and the more transactions in it, the larger the fee for the miner. In May 2020, the number of new Bitcoins entering circulation dropped by half, meaning that the expected revenue from each block also dropped by half, from 12.25 to 6.25 coins. As each halving event happens approximately every 4 years, 210,000 blocks, the expected block revenue will be cut in half, eventually reducing to near zero. Growing the transaction fee revenue will offset the decline in revenue from the block reward. Yes, indeed. Yeah. Oh, look at that. Yeah, loving that. I love the way how she's using the words Bitcoin and not just kind of like Bitcoin SV. This is great for Bitcoin because it's real Bitcoin. Earlier in August 2021, the BSV blockchain mined mined 5 1 gigabyte blocks, showing that large blocks can exist and be mined on the blockchain public network and not solely in isolation in the test lab. Miners have raised their block size hard cap limits to mine more and more of these larger blocks. Larger blocks such as this 1.24 gigabyte block have been mined, earning transaction fees. Large blocks such as the 1.2 gigabyte block have been mined, earning transaction fees 6.33 coins that are higher than the fixed subsidy amount of 6.25 for the block, and giving a total reward of the miner of 12.52 Bitcoin. The appearance of another large 1.7 gigabyte block shows that similar sized blocks are starting to appear on the public blockchain. Blockchain-based identity protocol users of Meta ID and applications such as Showbuzz upload large-sized data files to the blockchain and need larger blocks to operate. What type of data the blocks contain is irrelevant. Data might include large video files, raw metadata, or even pictures of cats. Or dogs, as we know. The block size is the key factor here, and the transaction fees now at more than the block's total reward for the block this size show that the landscape is changing towards transaction-rich blocks on the blockchain. A quick scroll down the list shows several blocks over 100 megabytes being mined by different miners. Miners earn fees for every transaction contained in a block, so that the transaction fee revenue increases over time. It will compensate for the decreasing fixed subsidy amounts. If you are interested in the economics of how this works, see this explanation showing why the economics of Bitcoin transaction fees are important. Technical Director of Bitcoin SV Infrastructure Team, Steve Shadders, said, on the BTC network, it took years for Bitcoin scaling battles to get nowhere and remain restricted at 1 megabyte blocks that can handle 7 transactions per second. On BSV, it took less than a week for miners to see the value in opening the door to 2 gigabyte blocks. While this sounds big, we are really just getting started on the journey towards 1 terabyte, 1 million megabyte sized blocks, so that the BSV can process millions of payment and data transactions per second. Users are starting to demand greater data capacity and miners want to generate greater fee revenue, so expect to see more and more gigabyte-sized blocks appearing on the public blockchain. Being able to transact large blocks and increase the throughput to thousands of transactions per second will encourage enterprise adoption. Imagine scenarios as diverse as fast-moving consumer goods, organizational asset tracking, music or film library storage with user downloads and tracking, or IoT data warehousing for consumer products. Absolutely amazing. There is even scope for an integrated healthcare system that can store all patients' entire healthcare history and prescription records throughout their whole lifespan, all stored permanently as immutable data on the blockchain, owned by the patients themselves. Scaling Bitcoin with bigger blocks containing more transactions and data and minimizing transaction fees will ensure that ordinary users of the blockchain will use it for everyday activities and contribute to its everyday adoption and ultimate growth. Brilliant. You know what we need? We need a little bit of a Laura Shin explanation. Yeah, let's have it. Let's do it. It's well worthy because it ties right in. Let's have a look at my messages, and I've got them here somewhere. Here, this is the one, I think. All the images that I use for my show, lovely jubbly. I hope they're around here somewhere. Come on. There it is. Let's do it. Here we go. Right, so let's find the video from Laura Shin. Here we go. Let's have it. Just going to find it. Gotcha. Here we go. Take the floor, Laura Shin.
So, as you mentioned, at a certain point when the block reward stops, there will be a transition where miners will be compensated in transaction fees, not in the block reward. And the current amount that they earn is from fees is about 9% of the block reward. And so we'd have to see transaction fees 11x by roughly 2140, which is when the new Bitcoins will stop being minted. But I just wondered, if we don't see an increase in the amount of transactions that can happen at layer 1, because the number of layer 1 transactions is limited. And right now, I feel like a lot of the scaling is focusing on layer 2. Can transaction fees 11x in that time, or will that require people to pay a lot more per transaction?
Over the next couple halving cycles, we should see it start to predominantly be the value that is compensated to the miners in the block reward. If Bitcoin is the world reserve currency that doesn't have a strong security model, like there's not a lot of monetary compensation in the block reward due to transaction fees, well, then its long-term security will be weak. If it is the world reserve currency, there will be very, very many layer 1 transaction fees.
Okay, yeah. So it sounds like you think it is possible that the amount in transaction fees will maybe not be enough on layer 1 to replace the block reward when the time comes.
Absolutely, there won't be enough to replace the block reward when the time comes on BTC because it's been purposely restricted to 1 megabyte. It can only handle 4 to 7 transactions per second. What a joke! Honestly, you've got to be so dumb if you believe they're BS. Honestly, absolutely insane. So, yeah, quite enjoyed that. Now let's get into some of these CoinGeek articles. I just saw this. This looks pretty cool. So, an article by our man, SV Train, John Southurst, how Meta ID is showing what BSV blockchain can really do. Excellent. Let's get stuck into this then. MetaID has created a lot of buzz recently, with some huge transaction blocks appearing in on the BSV blockchain. Apps like MetaBuzz and ShowBuzz are demonstrating how the platform can create social networks where users' data is portable, creating a less censorable internet. Waves of censorship and deplatforming on popular networks have seen users suddenly, and often without warning, lose access to the content. For some, like YouTube creators, this can mean the loss of a year's work. MetaID allows whoever uploads the data to retain ownership of it. Today's reality means individual platform owners will always want control over what appears on their site, but personal ownership means users have the option to move and restore their content to another place. So this is MetaID. So that's what we aim to achieve: an interconnected, user-centered, value free flow world. Excellent. All in one. That's what we want. Absolutely brilliant. The whole thing. Wow. That's going to be massive. Massive. Loving that. Loving that. As MetaID puts it, so as long as the BSV mainnet exists and the transaction ID of the MetaID protocol and Meta protocols is known, the recovery can be archived by getting the data from the BSV mainnet. MetaID and its sub-protocols are now chain-complete systems. All the MetaID based applications can be completely recovered through the BSV mainnet. Oh, superb, superb. Using BSV's mainnet protocol, another party can use MetaID identifiers in BSV transactions to build a data tree diagram that includes all relevant information about the user and how the content was created. The user can then use their BSV private keys to claim / prove ownership and restore it on the new platform. MetaID is the name of the protocol, and there are roughly 20 user apps built on its structure, including MetaBuzz, MetaNote, MetaPhotos, ShowBuzz, and ShowTalk. To create a portable MetaID identity, they first download Show app to register their details. Oh, might have to do that. Brilliant. So MetaID transactions over 1 million times. So we are foreseeing a huge increase in the future. It's just the beginning. Oh, brilliant, brilliant. Over 11,600 people have created a MetaID and produced over 1,144,000 transactions. They have been incentivized in part by the ability to earn a token called MetaCoin, which uses a novel proof of transaction size consensus mechanism. Whether you consider the kinds of files uploaded via MetaID apps worthwhile or not is less relevant. And the same could be said for any internet application, BSV or non-BSV. What matters is that the BSV network has the capacity to upload, process and store all the data at an affordable price. Other enterprise applications should take note of this and start planning their own use cases. Absolutely. The important thing is how much data can be generated by the MetaID protocol itself, rather than the individual apps. Anyone can build a new app using the MetaID protocol and try new users for themselves. Showpay CEO Sunny Fung, who was behind MetaID's creation, said that MetaID is not a service, not a series of apps built by us, nor a platform. It is a protocol of MetaNet. It's permissionless. Brilliant, brilliant. What his companies are aiming to do is prosper the ecology of MetaID, not to build or promote one or some MetaID apps, he added. CoinGeek spoke to Sunny Fung briefly about the latest developments and the contribution MetaID is making to the BSV ecosystem. So, interview with Sunny Fung, CEO Showpay. We've seen some massive blocks on the BSV lately. Is MetaID responsible for some of this? According to our rough estimation, 90% of the block size comes from MetaID transactions. Wow. Talon SV Pool increased their block size soft caps recently. Was MetaID involved in this decision? Nope. There's a ShowBuzz and MetaBuzz. What is the difference? Good question. There are two different apps from different teams. Most of the protocols they use are the same, so they display the same data from BSV. When the user creates a new post on ShowBuzz, it will be displayed automatically on MetaBuzz. Just imagine when you create a post on Facebook, it is also your new tweet on Twitter. That would be pretty good. Which one is creating more data and what kind of data is it? Sonny Funk said, I don't know, maybe people prefer to use Showbuzz. All kinds of data is possible. Did you do much marketing for the apps? What kind of person demographic is signing up for the social network? E.g. Age, men, women, interest groups. No marketing, no statistics about that. Oh wow. How many new users have signed up for the service, Sunny Funk? There are more than 11,000 people that have created their Meta ID. You can check the stats of MetaNet ID here. Brilliant. Oh, amazing. Amazing. Let's have a little look. Scan metaid.io. Right, check it out. Loving that. Loving that. Wow. Oh, getting excited, people. Getting really excited. Shout out to Elvis Cool Cat in the house. Thank you for joining me. So Line Digital Currency. Yeah. Let's see if there was anything else in tech quickly before we go on to our other magazines. Blockwood Miner Iris Energy fast to go public in US. BSV as I read that one. Okay. Alright, let's have a quick look at Cointelegraph just for lulz. There's always some stupid stuff on here that literally makes no sense. So this is, listen, shitcoiners love this. Absolutely love it. There's always stuff about Binance on here at the moment that cracks me up. So we'll see if we can find some stuff on that. I'm not bothered about any of the shitcoining that's on here, at all. Where is it? All Binance users are now subject to immediate KYC verification. Oh dear, brilliant. The crypto exchange will limit services for existing users unless they adhere to new KYC and AML requirements. I think I read this one the other day. Binance has been in the regulatory crosshairs of jurisdictions across the globe amid claims of it operating unlicensed businesses. As the remediation of ongoing scrutiny, the crypto exchange has publicly announced new Know Your Customer requirements for all users on the platform. Let me just see when this was written. Oh, 10 hours ago. Here's a new one. All right. Requirements for all users on the platform. Effective immediately. All users are required to complete intermediate verification to access Binance products and service offerings, including cryptocurrency deposits, trades, and withdrawals, the statement said. Moreover, existing users who were previously allowed to trade cryptocurrency without verification will be allowed to only process withdrawals, order cancellations, position close, and redemption. According to Binance, the change in policy for existing users will be rolled out in phases to ensure minimal disruption in user experience. However, immediate KYC verifications will allow the users to have complete access to Binance products and service, the company said. Binance strongly advises users to complete their intermediate verification promptly to avoid delays in verification process and restrictions on their access. The crypto exchange claims to implement KYC and anti-money laundering measures as a way to enhance investor protection against financial crimes, of which Binance is aiding and abetting. Currently, the basic verification on Binance portal is estimated to get processed in 1 day. However, verifying all documents, including government ID, facial verification, and proof of residential address will require a total of 20 days to review. Binance has amped up efforts to counter the criticism its business its operations currently face, mainly from regulators around the world. On July 28th, the crypto exchange limited the withdrawal amounts for users who did not complete full KYC verification. As a result of this announcement made by CEO CZ, the daily withdrawal limit for unverified Binance users dropped to 0.06 core coin from a previous limit of 2 core coin. Zhao has also shared intentions to work with regulators, as the exchange has been recently warned from operating unlicensed in several countries. They cannot last, because the people who are using it don't want it for that. They don't want to do it. They're all anarchists and stuff like that. Oh dear, its days are numbered, but we know the date that it's going to be numbered, 29th of October. Binance will shut up shop and probably do a runner with everybody's funds and not give a monkeys about it. They are completely unregulated. They can do whatever they want, and these shitcoiners with shit for brains have no idea what's going to hit them. Shocking, really. This Canadian regulator alleges OKX operator violated securities laws. Another one, OKX. Going down. $100 million funding round for Binance US falls through on regulatory concerns. Oh dear, oh dear. Despite a failed $1 million funding round, leading to the resignation of Binance US CEO Brian Brooks, the exchange still has its sights set on launching an IPO. It's an exit scam. It's a blatant exit scam. They're just simply trying to do what Coinbase did. And whoever else is lined up to do it, on Robinhood and blah 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 blah. They're exit scamming because they know the days are numbered. It's outrageous. Regulatory concerns surrounding the Binance US have reportedly culminated in investors backing out of the $100 million funding round. The failed funding round also prompted Binance US CEO Brian Brooks' surprise decision to step down after serving as its executive for just 3 months. Brooks, the former acting comptroller of the currency and former chief legal officer to rival exchange Coinbase, cited strategic differences after stepping down. The funding round had been intended as the first step in Binance's US path towards an initial public offering. Oh dear, that's probably why they're shutting down. Because they were just like, look, we need to do an IPO. We can wash our hands of it. We're no longer responsible for it. It's in the hands of shareholders. Out clean. Done. Can't get us anymore, but now they're screwed. I'm sure this is probably why they're shutting up shop. That would have been their exit, and they've left it too late. Coinbase got there first. Oh dear. According to the New York Times, Brooks had initially courted potential investors, including Ray Lane from venture capital firm Great Point and an executive at Japanese holding company SoftBank, under assurances the Binance US would comply with all United States regulatory guidelines. However, the investors reportedly backed out due to concerns surrounding Binance CEO CZ's 90% ownership stake in Binance US-based exchange, alongside anxieties regarding an ongoing investigation from US authorities that is reportedly scrutinizing Binance over money laundering and tax issues. God dear. The New York Times also reports that a lack of clear separation between the operation of Binance and Binance US sparked concern among the investors. Brooks publicly announced his resignation via August 7th tweet. A spokesperson for Binance US stated that the company would continue to take steps towards its goal of completing an IPO in the United States. I'd say the chances are slim to none on that one now. An IPO from Binance US would put the exchange on better footing to compete with Coinbase, which completed its own IPO on April 14th. And again, those investors are going to come a cropper because Coinbase is a complete bucket shop. And the owners knew it. That's why they exit scammed. Zhao hoped the investment round would allow Binance US to gain a better footing with US regulators to enable the IPO to proceed. Despite the recent troubles, Zhao still appears confident that the Binance US will be able to attract the investments it needs and have an IPO. He told Bloomberg in an interview on Thursday that there is still interest from top-level investors, adding, Binance US also aims to IPO in the not-too-distant future. After they'll change their mind after they've done a run on October 29th. Oh dear. Binance has been under regulatory pressure in a range of jurisdictions in recent months. The Financial Conduct Authority, FCA, in the United Kingdom demanded Binance halt all regulated activities in the UK at the end of last June. As a result of the FCA's demand, major banks, including HSBC UK, have cut credit purchases to Binance. Binance halted operations in Ontario, Canada in June after the provincial government took a hard stance against cryptocurrency trading in general. Crypto exchanges Bybit and KuCoin have also come under heavy fire from legislators in the Canadian province. Further, Binance elected to remove support from the Korean won and halted Korean language support services last week as South Korea prepares to tighten its crypto regulations. On July 3rd, the Thailand Securities and Exchange Commission also issued a criminal complaint against Binance for illegally operating a digital asset business in the country. The Thailand SEC reportedly issued several warnings that were ignored by the exchange. Waving a red rag at a bull. Absolutely ridiculous. Arrogance is what it is. Pure arrogance that they could be that stupid. Honestly. Analyst warning of a Q3 slowdown in Robinhood Doge. Who cares? Honestly, who cares? I only read this for lulz anyway. And what's this? Coinbase will buy 500 million in crypto and invest 10% of all future profits in digital assets. Oh, dear, oh dear. Dear, oh dear. Just shit coins. Can you imagine? CEO Brian Armstrong expects the percentage of profits spent on cryptos to grow over time. He doesn't know anything. Leading United States exchange by trade volume, Coinbase has revealed plans to add $500 million worth of crypto to its balance sheet. Coinbase CEO Brian Armstrong announced that the company's board had approved the crypto spending spree in a Friday tweet, adding that Coinbase also plans to invest 10% of all profits generated into digital assets moving forward. Armstrong also indicated the company hopes to increase the percentage of profit it allocates to cryptocurrency purchases over time. Oh dear, oh dear. So his quote here said, "We recently received board approval to purchase over $500 million. Well, that's nothing, 500 million when you've just IPO'd for 100 billion of crypto on our balance sheet to add to our existing holdings, and we'll be investing 10% of all profit going forward into crypto." Shitcoins, that is. I expect this percentage to keep growing over time as the crypto economy matures. A blog post published by Coinbase on the same day announced that the move will establish the exchange as the first publicly traded company to hold either ETH, decentralized finance tokens, and proof-of-stake assets on its balance sheet. Oh dear. The announcement emphasizes Coinbase's commitment to making long-term investments in the crypto sector, stating, "Our investments will be continually deployed over a multi-year window using dollar-cost averaging strategy. We are long-term investors and will only divest under select circumstances, such as an asset delisting from our platform." The post adds that future investments may be informed by its customer holdings, suggesting Coinbase may add an asset to its balance sheet should users make significant custodial deposits of a given cryptocurrency. Coinbase will make its traders on third-party platforms or via its over-the-counter trading desk to avoid creating conflicts of interest with its customers. According to Bitcoin Treasuries, Coinbase is currently the 8th largest public company by core coin holdings on its balance sheet and the largest crypto exchange by value of BTC held in its treasury. The bigger they come, the harder they fall. The news about the new expenditures on crypto comes just days after the Coinbase completed its Japanese launch in partnership with Mitsubishi UFJ Financial Group. Coinbase will also grant access to Mitsubishi's customer base of around 40 million customers as part of their agreement, according to the announcement. On the same day, Coinbase also announced that it had amassed a $4 billion war chest of cash to prepare for regulatory expenses, fines by the sounds of it, and a potential crypto winter. Yeah, when they know, because they know that Bitcoin is BSV, they know it's coming. They know it's coming, as do we. Oh my goodness me. Let's see what else there was at top stories. Is there anything else? I can see I've been going for 48 minutes already. Epic show. Yeah, I mean, that first article was quite long, and there were others. Let's see what else there was. What's this? A16Z's leads yield guild games 4.6 million investment. Who cares? Who cares? Yeah, I don't think I saw too much. I mean, there's loads going on, loads and loads. Yeah, so anyway, we will leave it there. Shout out to people in the chat box. I can see Elvis Coolcat, Arcade Rob, KP Dad in there. Gentlemen, please put your hand cashes and paymails in the chat box. Let's do this. It's time to ding a dong. And anybody else who's listening, let's rock and roll. Let's have this article by Zedina up on the screen while we're doing dinging of the dong. Lovely. Loving that. Loving that. Here we go. From Finland. Great stuff. Right, opening up my hand cash. Rock and roll. First one. Here we go. Elvis. Elvis Coolcat in a bag. Swiping to send on the way to you. Got it. Arcade Rob. That is Pikes. Here we go. Pike. Got it. Swiping to send on the way to you. And KP Dad 72 on the way to you. There we go. Swiping to send. And Elvis Coolcat sneaks in there as well. Oh, sorry, Orange Kick sneaks in there as well. Here we go. Oh, alright, orange kick, got it. Swiping to send on the way. Excellent, I think that's everybody. Right, yeah, long show today, but I actually wanted to read those articles anyway, just myself. So, yeah, we'll leave it there. As ever, hope you enjoyed the show, and be aware, take care, stay safe out there, joy giving, catch you guys later. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. Buy BSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.